Hello guys, welcome to my channel again. I made a new video for you guys today that how I analyze the trade that I took today. I'm gonna break it down for you guys top to bottom. Stay tuned. So I'm gonna show you guys how I took this trade and why I entered from that area and why I was aiming this place or why I had a hope that it's gonna come all the way here. Obviously now the time frame I'm in is 15-minute time frame. But to analyze it, the market why it's going this way, I'm gonna break it down for you and show you bit by bit. Okay. So now I'm gonna delete all this stuff now. Yeah. Start from clean. Start from clean. Let's say now you come in the day, you want to analyze the market, what's happening for tomorrow. So this is the day before today. So it's Thursday. Today was Friday. So what I do is now I go to daily time frame. I go to daily time frame, and what I do is highlight the higher of the day of that previous candle and the lower of the day. When I highlight that candle, the lows of the day and the highest of the day, what I need to check on, what is that candle telling me what is going to happen for tomorrow? So that candle there is telling you bearish. So if the candle is telling you bearish, you should only look for bearish movement. If the candle is showing you bearish and the only time you take a buy, the reason I took long positions today, I'm going to explain it to you guys, is if this candle here didn't break in the Asian session time frame like this, if that candle of the day that you're in on Friday didn't break the low of the candle, I mean the low of the day candle, then obviously you should only just look for any more continually bearish. But the reason I start looking for bullish when the candle on Thursday was telling me it was more sells were pushing the market is because the candle closed in the box. Yeah, the candle closes in the box. So obviously this was strong engulfing candle, bearish candle. That area where the market went back into it is you had the space gaps, fair value gaps, or imbalances, whatever you guys know. So you know this candle need to fill it in these imbalances before the market start continue taking all these liquidities like sell side liquidities. So anyway, once you highlight the high and the low of the previous day and the candle is inside the box, you need to then start looking for is there any fair value gap or any imbalances that the market need to fill it in before it continue going down. So this is how you analyze it. Then you go to 4 hour time frame. When you go to 4 hour time frame, you can already see a big fair value gap in there. Yeah. So obviously not on that day, on Thursday, you can see already big fair value from there to here. So that is number one. And you see you came back into it. There's another one in area as well in 4 hour time frame, which is here. It's another little fair value gap here. So there's two fair value gaps that the market showed you in 4 hour time frame, the higher time frame, that the market more likely will drag it back into it before it starts showing you any bearish movement. Okay, so now I start going to 1 hour to get a more cleaner fair value gap that I can think more likely market might come back into it. So now in 1 hour time frame and the 4 hour time frame fair value gap that we've seen and the 4 hour time frame is showing you the same area that the market will still have to respect and come back in that area, because look, it came back in, but that was not into the discount level because it need to come into this red line. You can't take a sell from this position and say, oh yeah, it came into the fair value, because even though that is the previous day, you could have continued going on because it was more strong sells were pushing the market. But normally you never get in from a fair value gap if it comes into the bottom of the line. You need to get in when the market comes into the discount level. So your position should be somewhere in here if you're ever going to take a trade and put your stop loss there, and then obviously continue whatever the direction you was aiming. But because it didn't come into the discount level, forget about this one. We focus on here now. All this move has happened. So this is our higher of the candle, and this is the lowest of the candle on Thursday. So we want to know what's happening Friday and what trades we should be taking for Friday. So now we're in a 1 hour time frame. This time here is 2 o'clock. Asian session already started. You see, strong push. It didn't take the low, but strong push came. Big engulfing candle. So when that candle pushes, it shows you there's a change of character or broken structure. Yeah. So now, what I do now, then I highlight the 8 p.m. candle. So that was the 8 p.m. candle, yeah, on the previous day. So what I do, then I go to this line here, grab it, drag it in like that. Okay. Guys, watch this now, guys. I'm going to make sure you all understand. So that was the previous 8 o'clock, 8 p.m. at night on Thursday, yeah. So that was the candle that the market closes after. So I highlighted. So now, obviously, all this area was just the market was obviously closed, and whether it start opening about midnight, start moving around, took the Asian previous previous 8 o'clock candle, it took it, and then it start pushing it back up strongly. So now in the top area, you can see change of character. Yeah, in this area is a change of character. Yeah, I'm gonna delete this, so bear with me. In this area, you can see change of character. Yeah. Okay. So in this area now, you can see change of character. The market has done around 2 o'clock at midnight Asian session. Okay. So now, when a strong push has happened in the Asian session, what did the Asian session created? Because it went closer to the fair value gap bottom line again, but in here you can see a fair value gap. So what I've done was then I start highlighting here to there, from that candle to this candle. You see, guys, we're still in a 1 hour time frame. So 1 hour time frame showed me a fair value gap that I was expecting the market to come back in before I start aiming the higher time frame fair value gap, where I'm taking the market need to fill it in before they start giving me more bearish. So when the Asian session was moving, I said, okay, I got a fair value gap here. I'm going to set a buy limit here. So I'm going to show you guys now again. So what I've done on my 1 hour time frame, guys, it's not my entry point. My entry point is 15-minute time frame or 5-minute. So I'll go to 15-minute time frame. I'll go to 15-minute time frame. And in 15-minute time frame, you can see you can get nice clean fair value gap here. Yeah. So now I set a trade up from here. I said if it gets to here in the morning, London session, 7 o'clock in the morning, and my target were to the discount level. I make my stop loss the previous, the second candle that created the fair value gap. Okay, that is 1 to 5 already, like 1 to 5. Okay, so what I've done then was, once I seen the previous, look, 8 o'clock in the morning, where is it? 7. That was the 8 o'clock actually, if you look at the shorter time frame. Yeah, but because we're looking at 15-minute time frame, guys, we're looking at 15-minute time frame before on that candle. But all this candle here to there is all 1 hour. Yeah, whether it's there or whether it's here, it's all 8 o'clock from that candle to this candle is all 8 o'clock movement, or if you put on a 1 hour. So if I go back on a 1 hour time frame, you see this candle here, this whole big candle is 1 hour time frame. So you can either analyze the 1 hour or keep it the 15-minute candle. Yeah, so let's say put it on the body. Okay, just leave it there. So put on the body, body of the candle, and you see now when the market start moving, it stops there because now we're on next day. So we're waiting the market to have a little bit break, because normally gold takes like a little bit 1 hour break or something. So as soon the Asian session is started, midnight, it start pushing into 8 o'clock. I mean 8 p.m. candle. Yeah, it came in and break it in, rejected it. So obviously I'm not saying to get in from the rejection. You wait until you start seeing Brockhaven structure here with a full candle, and then another previous candle is start opening on the break of a structure. So in this area, give it to your fair value gap. So you need this market to come back in here before you start taking the higher time frame fair value gap. Okay. But if you don't know how to get the fair value gaps, you can also aim this liquidity here and say, look, I wanna make sure it takes that liquidity. Okay. But the best way is to respect your higher time frame fair value gap. So if I go back to my 1 hour time frame fair value gap, is there. You hit the fair value gap for 1 hour time frame. If I go to 4 hour fair value gap that I had, it did come as well to it. So look, you see the 4 hour fair value gap and also the 1 hour fair value gap, it respected already. Yeah. So that's how you analyze the market, guys, and that's how you get in your trades. Easy and simple. Go to your daily time frame. I'm gonna go back for you guys. Go to your daily time frame, highlight the lowest and the highest. Then look at the candle on the next day, whatever the day you're in then. Did it broke the Asian low? I mean, did it broke the previous low, or did it broke the previous high? If the candle closes inside the box and not break in like this, you need to look for that bullish candle that's showing you in that area, that showed you the market rejected it but pushing it up. Why is it going? Where is there something that the market need to go back into it? Is there something that dragging the market back into it? Like something calling the market to get back in? Because the market need to fill it in these spaces before it goes the direction where everybody's thinking. Obviously, the higher time frame is showing you bearish, supposed to be continue bearish. Obviously, it should be bearish, but if that is broken the low, it will continue going down. If it didn't and it stays inside the box, and the candle obviously is half like small little candle here, but it's showing you is a bullish candle, you need to understand it must be empty. So all this area here now where it came into it was empty. So I knew there's a fair value gap down there. The market need to go back into it before you continue going down. So once you highlight your daily candle and it tells you whatever the candle is saying bearish or bullish, you need to start going then 4 hour time frame. In your 4 hour time frame and your 1 hour time frame, I call them the hours of hunting fair value gaps. I don't call hours of getting into positions or taking trades from 1 hour time frame or 4 hour time frame. No, 4 hour and 1 hour time frame is hunting for fair value gaps, like a place where the market more likely will come back into it. Whether you take a trade or you just have to be patient and wait until it takes all these spaces again and then start taking for shorts. You can do both ways. You can either wait and say, look, I want this to come back in here, then I can take short, or I'm gonna wait until it fill in every fair value gap, so every spaces that the higher time frame was showing you, the 4 hour and 1 hour, or even 15 minute, before you start taking short position. So the market needs you to be patient, or to make sure you take nice and clean and safe entries towards your fair value gaps as well. Like what I've done here, I found a little fair value gap here in the Asian session. That said, it's going to come back into London session, and it's going to take me towards my 4 hour and 1 hour fair value gap. So that kind of trades you can take it, or if you don't want to risk it, just wait until you fill it in all this area, and your previous day is telling you the market was bearish. Then you just start looking for sales. Okay, you can say, you know what, if the market come back in here, whatever the day is, stay safe. Just put your last previous high. Don't be greedy and say, yeah, I want here, I want to be here, I want my stop loss here. No, it's not about making your stop loss tight. Or it's not about you making your stop loss higher. It's about the risk management you're using. Risk management and also aiming your 1 to 2. You need your 1 to 2. We know this market is bearish on Thursday. Yeah. So on Friday, if the market comes in, obviously now the market is closed now until Monday. But if the Monday market start filling in all this area, the next few days coming, and after that next week is more likely going to take um, this low of the day of the candle. If it takes the high of the day and then start filling in all this fair value gap and start moving up a little bit, as long as it's not taking there and it shows the rejection, broke up in the structure, because this is what you guys need to guys see it. If the market goes in like that and break a little bit, but then come back in and then continue going like that and then breaks it, there must be a fair value gap here then, yeah, for you to get in for your bearish position. So you wait the market to come back in the fair value gap and then continue going your way. So that's how you should also get into the position. Don't think he's going to come back here and that's it, straight away go in. No, you wait the market to come in, break it maybe a little bit, come back in, go up, and it shows you it's rejecting that area. Maybe that might be the previous high then instead of that one. And then it breaks it and creates a fair value gap in this area. And that is the area where you need the market to come back in before you take your position for short again and start aiming the lower of the previous candle. Okay, so you go to your 15-minute, and that is your entry point. 15-minute on 5-minute is where you should get into your positions, guys. No 1 hour, no 4 hour. So you start looking at, like I said to you, highlight the previous 8 p.m. And when the Asian session starts, see what is done to the 8 p.m. of the last Thursday. If it breaks it and continue going down and come back in and create a fair value gap, you should know this market need to come into the fair value and continue going down. But what it's done was it showed you and took the 8 p.m. Low of this place and rejected a big rejection. I'm saying to anyone who is watching this video, please don't get in from here and say, yeah, there's a big rejection, where some of the people who sees in YouTube videos, they say, oh, if you see a big rejection, then you should get in it and then continue that way. No. You need to wait the market to show you a broken structure. And that is showing you this market is not only just rejected, because you can reject and continue breaking down. You need to see if the buyers are pushing the market. If the buyers are showing that way, they're controlling the market now and disrespected the last previous equal highs, and then sees a fair value gap in that area where it disrespected the previous highs, you need to wait. You need to wait all these candles. Be patient to come back in. Don't get excited and say, yeah, it came into the fair value gap. Because some of the people might be thinking like, oh, I want to make money quick. I want to, it's okay, I can get in from here. No, you need to wait and respect this place, the discount level. No matter how that candle came in, I could have taken this one. No, I tell you, don't get in from there and don't get in from here unless the candle come into this discount level and then rejected and closes above the discount. Then it's fully respected fair value gap. But if it disrespect the fair value gap and the candle closes below the fair value gap and another one is still continue, that means this fair value gap is not valid anymore. It is respected. So you need to know is respecting the fair value gap. Yeah, you can get in from there after that and say, you know what, that's it, I'm going to go in, because it closes above. Another candle is started and closes in the discount level, so then it can continue going up, and now you're not worried anymore. This is respected fair value gap. Yeah. So I'm gonna leave you guys like that now. I'm gonna make more videos for you guys to explain more, and for you guys to understand exactly how I analyze. And I hope this makes easy for you guys to analyze. Anyone that needs to understand, there's more videos I'll put on like that. You can watch on it, and hope that helps everyone who is still struggling to become consistent in trading. See you next time.